Chief Executive at XM.com. He's live in our Sydney CBD studios. Pete, welcome to you. Quite a definitive expectation on supply-demand rebalance in the next, well, certainly in the next few months to round out the year. Are you of one mind on that?
Well, good afternoon, Carson. I think you'd have to be. I mean, there are a couple of key points on that. Not only are we in a position where the market is very, very oversupplied, but we've got solid growth coming through from those Asia and India and so on. Now, we've got the Russians and we've got OPEC, and even this week in Houston, the OPEC producers are talking to hedge funds and shale oil producers to realise the global glut that they've got. So there's a temperament out there. People are trying to get themselves aligned. Long-term forecasts, 3 to 5 million barrels more than what we've got at the moment over the coming years. So I think we're in a position that's quite interesting, and that'll lead us up to it naturally, that end of May discussion in Vienna for OPEC, Carson.
Talk to us about, as well, the net long hedge fund situation now. My understanding was there'd been pullbacks.
Well, that's right. I mean, look, they've realised that trading range of that $52 to $55 doesn't seem to be a breakout. If we do see higher pricing, naturally it's going to force more of the shale producers to enter the market. So I think at the present time, the traders are realising that there's not much further upside with it. Trimming of positions and looking at other opportunities, being across agriculture. They've been short of gold because of the Fed opportunity. Non-farm payrolls coming out this week. And where does Yellen play over the next couple of weeks? So gold's off $40 in the last 6 or 7 trading sessions.
Go over to copper, because problems are plenty for BHP there.
Yeah.
Let's not forget, this is a sizable chunk of its...
global production.
Correct. Escondida. Where are we going on this? The headlines look all one-way traffic, and that's problem.
Yeah, well, that's been demonstrated with price as well. It's now at 5,800 a metric tonne. It's come under pressure. We thought it'd be, that 61, 62 could have traded higher. Grasberg's another situation there. So at the moment, I would say that a lot of these hedge funds are probably looking at shorting those positions, and they're moving markets as well. It's a bit of a wait and see, and there is an undercurrent there that the Saudi minister said in Houston this week. He was very pro-Trump. Trump is very much as far as getting that infrastructure and global build America back on track. Right. And that could ultimately lift copper prices. But at the present time, they seem to be sliding.
And so meanwhile, they're basically cementing ties with Mexico, and there's no love lost between that border state and the US. Now, a nationalist backlash, if it were to recur, what would you rate the options on BHP becoming a sitting duck?
Well, at $25, it's had a very solid run up, $15 or $16 where it was trading not that long ago. So it's been dramatic. You could see a little bit of price push downwards. I would think at present time it's hard to speculate where BHP is going to be. I'm more worried about what iron ore will do over the next, say, 3 to 4 months. Many analysts, Carson, are saying you're going to see, quite a heavy sell-off. It's a little bit undecided, but I think time will tell. And over the next couple of months, I think the markets will be very volatile.
Are you satisfied, Jeremy, that the whole shale and the pressure from the likes of a Texan underpin of the GOP just throws this neat formula of supply, demand and prices holding at these more elevated levels through the rest of the year? I mean, the temptation being, in other words, for Trump to executive order and ramp up a shale response to muted OPEC output.
Yeah, I'm not as convinced that he'll do that, and I don't think it'll happen. But I do think, I'm not necessarily buying that BHP view today either, because I do think that, there's plenty of supply globally. There's no doubt about that. I don't think the shale thing will help in any way, but I don't really think it's going to be a big factor. I don't think it needs to be. I think probably price adjustments more likely to deal with that. But, we've seen a renewed sense of demand, and we've seen a renewed sense of price activity. But, OPEC's more recent ways are more likely to come in and prevent, production cuts, or anything of the like going forward.
Just on as well the Samarco legacy, such as it continues to impact on provisioning, and now a Mexican connection, another JV. looming large. Are you satisfied that they've even today messaged in the right way and said, look, this is how it will be different?
Yeah, well, I mean, it's just one of those big risks in major operations like this. It's not something that, you know, anybody particularly forecasts. It's something that can happen. It's why you choose a diversified portfolio.
Remember, of course, Saskatchewan and Canada, they came very close to getting alongside a very inflammatory issue for the native people there if they were to go down that road of diversification into ag.
Teddy, Bougainville, I mean, you can keep going on.
Yeah, you can.
There's been things over history. Mining's risky, has environmental and social and health risks. So, but done well, it's a high return business. So it's one that you want a BHP rather than a one mine operation to invest in, because that portfolio approach of their asset base allows for things to go wrong and the business continue.
Okay,
that's good.
Pete, back on you, bullion. And we always make the distinction, the $8 producers, the global bigger picture. Now, just on the global bigger picture, it's been a consecutive tumble.
Yep.
What will arrest this?
Well, I think we've got to see what happens as far as Friday's numbers, and naturally this month you could just see a further washout. 6 consecutive days, Carson, of sell-off. We're down $40, as I mentioned. I think the Yellen situation, if we see a rate rise and we see strong non-farm over 190,000, then that's going to certainly, I think, push the hammer down for Janet and team. So you could see sub 1,200. The uncertainty is we're still worried about what's happening with French elections, Dutch elections, and moving forward into Eurozone, energy prices. So I think overall you may see a little bit further of a sell-off, but don't stand in the way if gold starts to trend higher, because I think it's certainly got an opportunity maybe in a month or two. And
to see the trend, your time frame is how long in that upward direction? What gives it those characteristics of it's here to stay for a little while?
I think, first off, if Janet hits the go button, if she doesn't hit it, then I think gold will trend higher quite quickly and it'll retrace that $40 loss. If she does hit the go button, then you probably see under 1,200, then the uncertainty, and let that wash over for a month or two. But there's still a lot of things on the forecast front. What happens with oil prices? Where do the hedges play? And of course, what happens to US dollar? And all of that, all of those wonderful ingredients deliver an interesting cake by, say, late May, early June.
Okay. Peter, good to talk as always.
Thank you, Carson.
We will check in with you again.